is Kanaram Gume. Glad to have you, gentlemen and lady on the panel, Barbara, Apollo, and Alan. If you're out there and you think this conversation is important, when someone mentions a point you like, you say, you don't clap, you say, mm-hmm. What do you say? Uh-huh. All right, so I'll begin with you, Barbara. Let me begin with you, Alan. First, tell us about Goldmine.
Okay, Goldmine is a microfinance institution, Tier 4, that started in 2011, right after my university. And we've now been in existence for, I guess, is it 11 or 12? 12 years this year, yes. We have a range of products. One of them, fortunately, is financial literacy, both for businesses and individuals, and also loans. Yes, so we have a range of them. We also give personal loans, business loans, and we just opened our second branch in Ntinda last week. Yes, so there are a few Goldmine members here, some of the people on the marketing team, and I see the branch manager of Ntinda is also here. Yeah, I think that's, in brief, that's it about Goldmine.
So what's your relationship with young people? How are you pushing them to reach their goals?
I think the relationship is, first of all, I'm a young person as well. So I'm a colleague. But one of the things that we focus on is the belief that each person can be able to make it wherever they are. So our focus is our focus around the young people is around financial money management, because using my own the principles that were able to help me be able to generate some cash flow and be able to get it out. So it's practical principles that have actually worked. And fortunately, we work with people from different sectors, whether they are people from who are still at the university. I remember even much earlier I used to work with people who are just in their first year of university or second year, because financial literacy is not only when you finish university or when you've started your side hustle. That's far from it. I think all of us need financial literacy right from the beginning of school, if possible, school. So I think that's how we come in to help the young people. And our goal is we have a group called Club 1000. It's to create 1,000 billionaires and 1 million millionaires. We work with the community. There's a community in our area called Kataza, where there are people who live temporary housing structures, if I would call them, who we've been able to put them in a group of 100 people. These people started by saving 5,000 shillings, 1,000, and in a space of 6 months, that group was able to save, they were able to save million shillings. These are people who live in temporary shelter, and they were able to create a few millionaires within the first 6 months. Now, that may sound like a very easy thing, but for a person who are painters, who go to more people's hostels, to be able to come out and have million shilling savings, for us, we believe that was a big step. Yes.
Barbara, I want to come to you. Why is financial literacy important? If I am earning 1 million shillings, let's say I'm still at school, maybe I take care of my hostel and the needs to maybe 350K, transport, blah, 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 it goes up to, let's say, 500K. I can save like a 200K and use the other to cater for my other needs, family and whatever. What is financial literacy beyond just that?
Thank you, Canary. That is a very broad question. But maybe let me just introduce myself before I dive in. Hi, guys. It is Friday. They haven't given us drinks. We are sitting like we are in a classroom. But it is nice to be here with you. And just before I really get started, I don't know how many minutes I have on Pada Kazindalo. I just want to tell you something very small about myself. There's a reason I wake up every morning to do me. I wake up every morning because I want young people to find their place and own this narrative. I'm 43, I need to pass the baton. I also wake up every morning because I want women, especially young women, to find their voice. Everything I do speaks to that purpose. Even my journey, for those of you that have followed me online, has been towards that. Now, when we talk about freedom, right now, I feel I haven't achieved yet, but I'm free. Why am I free? Because right now, if I wanted a new pair of shoes, I can buy it. I can afford it. Why can I afford a pair of shoes without debt? That then speaks to the question he's asking. Financial literacy, luzungu lungi, it's too much English. I think for me, in a nutshell, it's all about freedom. Bottom line. Can I actually be able to earn money without being worried about the expenses that I am incurring every day? So do I live beyond my means? Or can I pay my expenses and still have something left over and so on and so forth? So for me, financial literacy, if I can break it down a little bit, it is all about money principles. But money principles start with you. Yeah? So what is your character, for example? What kind of person are you? Are you the kind of person when you get the 1 million shillings, the first thing you do is find the first party to go to and first show off the money you've gotten? Are you the kind of person who has to go and show off because you received a paycheck at the end of the month, which you have already spent, by the way? What is your spending character? And normally, your spending character is described by the people that you surround yourself with. So if you're the kind of person who finds yourself out of money every day, there's a reason why. First, look at your what? Your network. Because your network also describes your character. It also describes your spending habits. So if you're struggling financially right now, let's revisit that. The next thing, and I'm talking about principles because it's the best way I can explain this, is attitude towards money. Bameka abagoba sente. How many of us are looking for sentes okukameza like money for now? You're not going to lift your hands. Bakash is going to put you on social media. A lot of us chase money. The attitude towards money is we chase money. How can you chase a piece of paper? Do you know it's a piece of paper I can use to wipe my behind? It's a piece of... Money should be chasing you. And how does money chase you? Money chases you if you have the right character to spend it right. And the right character is heavily dependent
was coming, it reminded me, I kept thinking in my head, and I apologize to the Bakash, I didn't read through the panelist brief. So I was thinking, if I didn't, how do I sound clever? Then it reminded me of a scenario when I was at university. You know, sometimes the stories feel like I started with a feather, then got a chicken farm. The chicken farm was there. I don't come from really a bad background. The background is good. There was some money there. But I made some choices. It's also not guaranteed. I had my first house, or what do I call a house, when I was at university. And this is what happened. While I'm telling you this story, I'm coming to your bit. I hope you are not, my father is not on social media, but I stole land from my father and I decided to put up a house. So he won't know. He hasn't found out that I stole it yet. He just sees me living in that place. But what piqued my mind is I left Chambogo University one afternoon. I get on in a taxi, then get in a border because it was sort of village. And then when I was getting off the border, the engineer, allow me to call him the engineer so that I feel like I was a big person. But you know those fundis, eh? The engineer was about 56, something like that. When he saw me getting off the border, he told those people, Muzeya Ze. Guys, Muzeya Ze. I was 26 then, but I was Muzei. I was grown up. I was young, but grown up. A 56-year was calling me Muzei. Now, you, young ones, yes, you are young, but no, it's not your option that it's not your choice. You are young because it's the season. But are you grown up? Are you grown up? Going to savings. Savings is a grown-up thing. You will understand that you have grown up when you have actually started commanding your money to go somewhere, instead of it commanding you to go somewhere. On Friday, because, as she said, it's payday, the money is telling you, why are you here? Like, we are having this conversation and the message comes in, you have received 200,000. You will sweat. You will, like, the temperature will rise and you will start asking yourself, what am I doing here? I have 200,000. What am I doing here? That you can never rest until that money has been spent. And eventually, when it is spent, you say, oh.
And let me remind you, there's a thing around young people. So when the money pops, that is pops and says,
exactly.
Only one.
Like one of your favorite tagline is, what name does your number bring? When someone asks that, they will own you. And then they will order you where to go. So, what does savings mean? Savings is not for young children. Okay, I am insulting young children. Savings is not for lazy people. Savings is for grown-ups. They are babies. I know, Canary, you've just had one of the babies. And I haven't really, congratulations. But I think one of the things that you have done, you have set up an account for that baby.
3 years ago.
3 years ago. Now, Canary has a baby, has a person who is not a year old, but has much more money than 20-year-olds. Do you see what I'm saying? There is a baby who is more grown up than you are. Savings begins when you grow up. So that baby, what's the name? Cairo is grown up. The man may be a millionaire. Right now you're looking at your account and you're saying, don't send money on this phone. Bamanja. Like, you are actually in debt. Scratch all that. Forget that you are young, because Cairo is not even half your age. He's a millionaire. I know he's a millionaire. And I even think he has a dollar account. For you see dollars. You count them when they are selling players from one club to another. That's when you mention dollars and euros. You haven't touched them. But I'll keep talking. Grow up and you start saving. That's the only thing.
So I asked something that you did not answer. Every time you save, something comes up. And then you're like, after all, I save money to solve my problems. So let me touch, I'll put it back. And for some reason, it never goes back.
My apologies. If you have no goal or purpose or objective to your saving, eat your money. eat it. Because you are just postponing expenditure. That money, if it has no goal and you have saved it, when a problem comes up, it is available for the problem. When someone dies, of course, when you haven't reached the level of responsibility, when they die, they will call you. But usually, at our age, when someone dies, someone calls you. And because you have saved some money, which you have no objective over, you end up buying the coffin. But when I have that money and it is for my Subaru in 2 years, when you die, you die. It is my Subaru, you will die. And guess what? Even when I don't contribute to that coffin, they will be buried. And they won't come back. So, the thing about not diverting your savings is form an objective, a purpose around it, and stick to it. I'm not saying be mean, like you are the one dying and you have 1 million shillings you don't want to spend on yourself. No, that's not mastering money. Master your money, but form an objective around it.
Thanks.
And that money won't be available.
Thanks, Apollo. Let me engage Barbara again. Sorry, Alan. But so these stories of people who are sort of like 40 and above, when you hear their stories, the inspirational talk, I started with a what? I started with a hen. Now I have a whole poultry house with 2,000 birds. I've built a house. They look unbelievable. These young people want to understand. How do you multiply your money? You have your car 500K. You want to save it. At the same time, you feel like if you save 500K for the next 6 months, it will just be 5 times 6, right? But you wish you could invest it somewhere and make some money. At the same time, you don't know which is the best option when it comes to investment, and things are not adding up. How do you deal with such a situation? How do you multiply your money, however small or much it is?
Okay, thank you for that question. Let me use my story. When I was at university, I had the chance to go abroad. And during our orientation week, you know, in the States, they have all these banks that come, credit card, what? You get credit card. So I got my first credit card, just to give you a back-end story before I answer your question. So I get my first credit card, $5,000, the Ugandan from Masaka. I use it all. A credit card. Oh, okay. Do I have a sample here? We all know what a debit card is. We all know what a debit card is. A debit card that's when you withdraw money directly from your account. A credit card is really debt. So it's a loan, but on a card, really. So you can have a credit card with limits, maybe up to 5 million or 10 million shillings or 30 million shillings, depending. It is a cash economy in Uganda, but abroad it is a card economy. It's cashless. So everything is on a card. Either it is money directly from your account, which I think everybody abroad is broke because they're all on debt, or it is a credit card. Are we together? Where the loan is on a card. Okay, it's not directly from your account. But when I got that, I spent all of it the very first time. I did not know that it was a loan. I thought it was free money. I was 17 years old. Okay, I got a top up. By the time the first year was ending, I was $15,000 in debt. I was not yet 18 years old. And then they started. And then they told me, we are going to deport her. Okay? I'm just giving you now how I'm going to tell you how I got out of that. So you can imagine my father sitting in Kampala, and they are writing to him, telling him, your daughter owes us 15,000 US dollars. If she doesn't pay it back, we are returning her back home. Because those were the days in the 90s. That's how it was. If you had debt, if you drank, drink, drive, all that, you were deported. Ladies and gentlemen, that is when it dawned on me that even to see free. I had to learn how to hustle. It is at that time that I learned you can do 5 jobs at the same time with 2 hours of sleep. In there, I was going to school full-time. I had a full-time band and 3 or 4 other jobs that I was doing at the same time, including babysitting, cleaning old people's behinds. Mention it. I was even a gate man. I did. I had to pay that money back. It took me 12 years to pay back $15,000. It was a lot of work. Now, during that time, as I was paying, I wanted to come back to Kampala on holiday. But it was the only time I could sleep, because I used to sleep in my car. My car was my home, okay? Now, I had to save for my ticket to come home, because Mr. Kasekende Martin was not sending that money over. And he said, "Well, you got to pay for yourself and you come." Saving was the hardest thing I've ever had to do, because that meant I had to do more jobs to earn more what? More money. My rent was $800. In this weight, I can't fit in the bathroom of my studio then, okay? Eating was $60 a week. Those were the 90s, early 2000s. I don't know what the status is right now. Okay, so you can imagine. So some nights, I never worked, I never ate popcorn and water to survive. Why am I telling you this? Is I don't want to make it difficult for you. Would you mind a hard story? But the truth of the matter is, financial freedom, especially when it comes to investing Kalito money, you need to learn how to not only work hard, but also feel the pain. Because we are creatures that like the social, comfortable lifestyle. When I left Kampala, I almost had everything. I thought everything was handed to you on a silver plate. I went to the States and hated myself for a very long time. But it taught me that the value of hustling, okay, can actually save you. But the way I started saving, it is very difficult, Canary, to save even a person who's earning 20 million. Now you can say it is very difficult for me to save 20, off the 20 million I'm earning a month. Where does that go back to, Canary? I'm going to go back to character. The kind of person that you are, let me tell you, even if you had 500 and you had a very poor character towards money, even with 100 million, you will have the same. If you are not saving anything then, even by the time I give you 100 million, you do. Ladies and gentlemen, I can tell you in Uganda here, to invest, to start investing in your T-bills and bonds, you start with just as little as 100,000 shillings. 100,000 shillings. To just start, I'm not saying you're going to earn your return immediately and it will be heavy. No, but it is getting into the habit of saving. To save with these unit trusts, or whether it is insurance or whatever it is, all those you start with very, very little money. It's 50,000 shillings. Some of them are 20K. So you cannot tell me that it is very difficult for me to do. Yes, it is, but I have been there, done that. It is possible. The trick here is, are you ready to get out of your comfort zone? If it means going out, for example, one of the things I did, I quit drinking. I was spending, I kid you not, 520,000 shillings a week on my wine. 520,000. So guess what was suffering on this? I'm not saying do that. I'm just saying that's what I did. Okay? As I was reevaluating my finances. Yes, it is 500,000. Before you got that 500,000, how were you living? Are we together? Huh? Because even when I give you 1 million, you'll say akasente katono. Before you earned the 1 million, what were you doing? My first salary, I was earning $5 an hour for $25 is how much? For like 20 hours a week in an apartment of, hey, if you can calculate. But even then, I had to save for my what? For my ticket. But like I said, I was lucky enough to listen to some of these motivations. By the way, this is your best friend. You guys are techie people. People here, you're how old? Like 25, what? Those ages. This is generation what? Z. Gen Z, I'm Gen X. We're not even millennials. This one is a millennial. We are Gen X's. I don't think they're baby boomers. We are the oldest here. You guys are very familiar with this. Listen to what some of these people did. In my case, I learned how to save through the church I was going to. And they told me those principles of saving. I guess it's a Jewish thing where you had those 4 things that you had to keep aside and put a thing, saving $1. I started by saving $1. Just $1. $1, which is what? 3,000 shillings? It is very painful. And indeed, I would love to go back and use that money. But he said, what do you need to have? He said, you need to have a what? A goal. My goal was to go home. I needed to come back to Kampala. For sure, people I'm well off when I was struggling. It's just to feel good by being here. It was very difficult to do, but I managed to do it. So things around investments, it is a mindset thing. If you believe you can't save, you won't save. But the options of saving are very many. And you can start with as low as 50K. 50K a month. Even 5K, okay. We can go down to, I'm using 50K because I want us to be a little bit more ambitious than 5K. I can tell you one thing. In the market, we work with a lot of market women, ladies in the market. Those ladies save 1,000 shillings a day. Those guys get money from our, under their cooperative, and they have never defaulted. Both when I was in commercial banking in Stanbic Bank, even here at UDB, they are the first ones to pay. How much money does a market lady earn? 1,000 shillings a day. And the moment they get, they also put in their circle, and they also pay towards their loan facilities. And a lot of these ladies have gotten pieces of land. And they started slowly. Mindset, guys. Mindset and character.
Thanks, Barbara. Let me come to you, Alan. So young people find themselves trapped in debt when they come to the people who provide the loans, the financial institutions. Get a loan of 1 million, go do something, doesn't work out. The loan is due, go somewhere else, get a loan of 2 million, pay the 1 million and the interest, do something, doesn't work out, go somewhere else, get another loan of 3 million, pay off this, like that. They find themselves trapped in a cycle of debt. How would you advise young people here to be able to maneuver such a situation?
Okay, so you guys, first of all, are not as young as Barbara is making you seem. These faces have these faces have quite some experience. Now, the biggest advantage young people have is their age. You can only know that. I usually tell people that the life I lived was because of the financial decisions my parents and those who raised me were able to take. You understand? The life Canary's child is going to live is because of the decisions, financial decisions, that he's taking today. Do you understand? If it were up to almost all parents, the children would be in international schools or in, do you understand? The reason we didn't go to those international schools was because of the financial illiteracy or literacy of our parents. Now, let it come down to you that your children, I want you to think about it that way, because the minute you start thinking about your children, you're thinking long term. Are we together? That your financial discipline, your financial literacy today, or the financial discipline or indiscipline thereof, is going to determine the next generation's lifestyle. And not only that, but I can tell you that the more you think long term, the more you think beyond you. You see, saving is a form of sacrifice. Are we together? When you save money, you're sacrificing for a better tomorrow. And the minute you sacrifice for a better tomorrow, the ecosystem begins to get complete. Because you're going to invest, I hope, because we don't just stop at saving. Right? We save to invest. And the minute we invest, there are jobs being created, there are taxes being paid, there are hospitals being built. Do you understand? I want you to think about it more broadly. Now, one of the things, I started writing down some notes as the panelists were speaking. One of the things that I just need to communicate to us is, first of all, do not look at money as a number, because sometimes it can be discouraging. You understand? You may be making so little, and then you're hearing Barbara talking about 20 million, 50 million. Do you understand? money is in percentages. Okay? It's a mindset. The minute you set a goal, you need to set a goal that is a bit ambitious. You understand? Do not set a goal that is within your reach. For example, if I earn 1 million shillings, and I'm saying I'm going to start saving 10%, that's 100,000 shillings. Do you understand? Now, my goal cannot be 1.2 million in a year. That's not a goal. You can achieve that without any hustle. You understand? Now, a goal is when you say, I want to make 3.6 million. You understand? This year. Because why? Because you're setting something above what you can achieve within your means. Do you understand? You're putting in a certain gap. Now, money is in two forms. There is, when you're putting in place principles, like the ones Barbara was talking about. So you can have a flat principle where you say, 70% of all I earn, I will do what? I'll spend. That means 30%, you're tithing, you're saving, you're doing these other things. Now, I look at money in two different folds. There is the regular income, the predictable income. Do you understand? Now, for those who are in employment, predictable income is salary. For those who are in business, predictable income, you must pay yourself a salary. Do you understand? When I was starting business, because I had finished university and my pocket money was 200,000, when we were making revenue of 400,000 a month, guess how much I was paying myself? 200,000. Now, this is what he talked about. He said that when you're young, you don't have certain problems. When people die, they don't expect you to contribute. Do you understand? When you don't yet have friends who are getting married. I know many of you now are old, you have friends who are getting married. But there are those who are young. That's the biggest advantage. Because those expectations are not yet on you. Maybe you're not yet paying rent. Maybe you're not yet, do you understand? So you have a certain expense line which is not yet on you. Now, that's the advantage. So when I was starting out, my first goal in the first year, remember I was making 400, I could be able to make about 2.4. My goal was 10 million. But why? This is where the magic is when you're saving. The magic is in your other income. You must put in place principles for your other income. What kind of principles am I talking about? You see, other income is unexpected income, isn't it? When I'm paying myself a salary of 200,000, the reason is such that I do not touch this. You have to put in place principles for your unexpected income. Are we together? What kind of principles? Because you already have the regular income, which you have planned for, to take care of your everyday needs, like transport, airtime, it should be able to fit within your regular income. So what that means is that if you're going to be able to tithe, you tithe 10%. Remember I told you, you must look at your money in percentages. Because the percentage may not increase, but the money, the number, the value increases. Right? This month you may earn 200,000. Next year you may earn 500. Do you understand? But the percentage is the same. If I say tithe 10%, it will be 10%. Whether it's of 1 million, 10 million, 5 million, it's the same. Right? And I think that's why God was wise enough to tell us 10%. Because had he told us 1 million shillings 2,000 years ago, or had he told us 1 shilling, today we would be saying, I've tithed for the next lifetime. Right? So that's the idea. We look at money in percentages. When I'm looking at my other income, so because the regular income usually is fighting with my day-to-day expenses, you will likely save maybe 10% of your regular income. You must save a percentage of your regular income. Okay? But then your other income is where the magic lies. That when you get 1 million shillings, unexpected, when you get that side hustle, that side gig, and you make an extra shilling, guys, majority of that money should be put aside for investment. Do you understand? Why? And I need you to think about saving and investment, not just in the form of saving. So the first thing you must do is set a financial goal. Every single year, you must set a financial goal. 2, you must communicate that goal, create accountability. make sure that there is a communication mechanism. But 3, put in place principles that are going to help you, especially the principles you must put in place, I tell you, is for the unexpected income. Do you know why? Because majority of the time when we are helping people with their finances, the first thing we tell them is, write down your expenses. I can tell you the truth. If you've never done it, go back home and write down all your expenses. I'll tell you what you're going to find. You'll find that you spend 3 to 5 times what you earn.
Sorry, Alan. Car owner UBJ 445W. You're blocking someone. Kindly come and take it out of the way. UBJ 445W. Thank you. So sorry about that.
Okay? So you're probably spending 3 to 5 times what you earn. This is a very weird thing. So usually most people ask themselves, sometimes you don't borrow that much, but then you're asking, how is it possible that I earn 1 million shillings, but I'm spending 3 million or 5 million? Do you understand? It's magic. The reason that is possible is because you have another part of the income which is not predictable. It's called other incomes. Are we together? The unexpected income. What that means is that your unexpected income is much more than you expected, than what you actually earn. Therefore, on the unexpected income, these are the principles I would advise you to take. 1, tithe your 10%. 2, create an emergency account of 10%. And then 80% should be put in your investment account. I don't even want to call it savings account. You understand? The minute you try it out, that means that the other 3 times your salary, the 2 times, is going to go towards the investment account. Therefore, the goal which you had set at the beginning of there, this is why I usually tell people, your goal should be 3 times what you can achieve. If what I told you, 1.2 million a year, should be 3 times or 5 times that. Okay? That's how I advise people to set their goals. Because your unexpected income is usually 3 times more than your expected income. Well, how do I know that? Because your expenses are usually 3 times more than your regular income. So these are some of the things that I would advise you. And then stick to the principles. Because the principles are what help you to grow. I can tell you, if you don't learn to say no, you're going to fail every time. Because as you grow older, you must continue to say no. Even much more. Why? Because you get many more demands, many more pressures, and everything seems like an emergency until you say no. Okay? When you say no, there will be a lot of talk. But guys, it's just talk. Remember, the Bible says that money makes many friends. Even those who abandon you after you said no, later on in future will come back and say you're a good guy. So that's why your focus should be. Think long term. This is the strategy I should tell you guys. Think long term. And remember, the stories that we always hear where people say that you started with 1 feather, I can believe that most of them are true. They sound like they started with 1 feather. But it's because the principles, they grew in the principle. They did not rob any bank or do anything wrong. You see, if I am obedient in the principle, I can do anything and succeed in it. Because it's not that thing that makes me successful. It's the principles that I'm growing in that make me successful. So you must learn to be obedient to the principles. Because the principles work both in your personal capacity and in the business. Whatever you see businesses doing is what individuals are supposed to do. And it doesn't matter whether you are a cleaner on the street, it's the principle that you must be obedient in. Because once I am going to say that you started by cleaning, that's the opportunity available to you at that time. You see, she started by being a gate man, by cleaning people's things. That's not where she is today, right? Because life is designed in such a way that we must advance. Now, I'll end with this. I always tell people, it's more important to have a financial plan than a career plan. Why? Because with the financial plan, the career is taking care of itself. But unfortunately for us, at this stage of our lives, or even those in employment and wherever, we are wired to only plan our careers. And somehow we expect that when the career has taken off, then the finances are also taking off. That's a lie. How many of you believe that's a lie? Do you know why? Because we have seen people, leaders in organizations who make so much money, and when they are dropped off, they go back to the village. Isn't it? So that's a lie. It's a lie that a career plan will automatically lead to a financial plan. But do you know what the truth is? A financial plan automatically leads to a career plan. You do not have to do anything once you have the finances. Not so. You can go and play golf because you're set. Are we together? What does that mean? That means that you as an individual must focus more on your individual finances. Huh? Hello? Why like you guys are distracted? You must focus more on your individual finances. If you ever get a job, that is one of the things that is supposed to help you achieve your financial plan. Are we together? If you get a side gig, that's one of the things that's supposed to help you achieve your financial plan. That way, you wire your mindset not to undermine a job. You see, if you have a financial plan, let me tell you, you can even go and become a conductor. You can even ride a boda. Do you understand? Because that job is not what is going to define you. It is your financial plan, your thinking, your long-term thinking that should define where you should go. Do not undermine the opportunities that are presented to you. Why? Because in a few years, I can tell you, in a few years, you're the one they are going to be talking about that you started with a feather. Why? Because they saw you riding a boda. They did not know that that boda was supposed to help you on your financial plan to get you to your destination of 5 years. Thank you.
Well, thank you so much, Alan. I like how you mentioned the principle of emergency fund, because honestly, I feel like that's the only thing that can help you resolve that thing that Canary talked about, the one that's always coming up. Over to you, Apollo. We said that most people here are young, and that's for sure. They probably don't have as many responsibilities. But I would like us to speak to a few exceptions. A 25-year-old who is probably a product of a single mom. They have to do a job to pay their own tuition. And definitely some of the responsibility from their home falls on their shoulder, despite the fact that they're still young. What would you say to that person? Also keeping in mind what we said earlier, that even though you don't buy the casket, that person will still be buried. At what point do we cross the line between accepting the responsibility that has been put onto our shoulders at that age and also being able to confidently work out our financials effectively?
I start with saying I cannot, you know the way you say, I can imagine. For me, I can't imagine. I am a last born. I stopped paying fees, my father stopped paying fees in S6. For the next 6 years, the government paid my fees and paid me to study. So I may not be able to relate. However, it is real, the hustle is real. You are the candle in the family. And these are some of the things that come like you, because it's you who has made it, you need to go and pull. But then you need to also be realistic about it. How much can I pull? Because sometimes you have been pushed through to university. It doesn't mean that you may need to push everyone to university. You may need to set, yes, I've said I am a product of privilege, but I've also gotten to pay fees for my nephews and nieces. And this is the role I give them. I pay school fees for 2 years, after S4, for 3 years, after S6. Now, because they also have some privilege somewhere, most of them have misused. And when those 3 years end, uncle, I look at them, yes, uncle. I say, yes, what is it? 3 years, I gave you 3 years, and 3 years you didn't deliver your degree. I can't do anything. So sometimes they need to take that stand, and you may not be, but and I know you will fear to be talked about badly, and it's okay. Let me tell you. Again, please don't tell my parents.
Especially if it's your direct family, like your
Yeah, like, I come from a big family. Right now, I'm rushing back home because we have one of our brothers getting married. It's a, you know, we grew up where the family is always 20 children in the family, 20 children. So your father takes care of so many people, so many other people. But this is my experience. When there is something that needs money in that family, regardless, I think we have in our family WhatsApp group, what we call our family, the Mbowa children, we are about 38. We can fail to raise $1 million from 38 children. And I'm telling you, I'm the last born. From 38, we can fail. So while he took care of all those people, they will not stop to come and take care of him. So even that child, that person who is in this pit, he needs to know that deliver your minimum. Don't bank on them that they will do something in return. So don't kill yourself over them. Do what you can. But allow me to add something around Barbara and Alan. As young apologies, falling age. As the young ones, one of the biggest assets you have, and he said it, is the age. But may I want to say, I want to call it different. You have time. You have time to be lazy. Actually, you can go through your financial journey lazy. This is what I'm talking about. Time treats money favorably. If you saved 50, 75K for the next 25 years, and it's growing at about 5%, you are likely to hit about 80 million. All you're doing is 75K. And what that needs is just time.